Let's talk about employee benefits and what that does to engagement and what should be offered to the employees. So sharing screen here. Okay. So benefits is a major component of a pay package, and employees do consider this as a very important part of how much they make. So when we discuss pay, the benefits that people get is a very important part of this. So whether it's insurance or retirement or employee services, flexible benefits, all of that is very important to the employee. So we're going to talk about pay for time not worked, insurance, retirement, and then different services. So benefits are the indirect financial and non-financial payments that employees receive for continuing their employment with a company, and which employers use to attract and recognize and retain employees. So the employee benefits account for about 1/3 of the total compensation of that employee. So the main pay for time not worked. So this could be vacation, but we also have like insurance, retirement, and others, right? So we're going to start talking with that about that time that people get paid for times that they are not at work. So these are called supplemental pay benefits. They are very costly benefits because they are a large amount of time off, because of the large amount of time off. So they could include holidays, vacations, jury duty, funeral leave, military duty, personal days, sick leave, sabbatical leave, maternity leave, unemployment insurance payments, layoff or terminated employees. So you can see there's a lot that fits into this category. Unemployment insurance. So all states have their own type of unemployment insurance laws, and these provide benefits to eligible workers who become unemployed through no fault of their own. If an employee is fired for due cause, they do not qualify for unemployment in most situations. The benefit derives from a tax on employers that can range from 0.1% to 5% of taxable payroll in most states. An employer's unemployment tax rate reflects its rate of employee terminations. So, and this is rising in many states. So firms aren't required to let everyone they dismiss receive unemployment benefits, only those released through no fault of their own. So strictly speaking, a worker fired for chronic lateness can't claim benefits. But many managers are they're not very careful in protecting their employers. So employers end up spending thousands of dollars on unemployment taxes unnecessarily because the managers were not careful. Vacation policies range from highly flexible, traditional, to very restrictive. Most firms offer vacation and holiday benefits. About 90% of full-time workers and 40% of part-time Employees get paid holidays, an average of 8 paid holidays off. So common US paid holidays include New Year's Day, Memorial, Independence, Labor Day, Thanksgiving, and Christmas Day. On average, American workers get about 9 days of vacation leave after 1 year of employment, 14 days after 5 years, and 17 days after 10 years. This is drastically less compared to other countries, by the way. Firms should address several holidays and vacation-related policy issues, such as how many vacation days employees get and which days, if any, are paid holidays. Other vacation policy decisions may include whether employees, paid for employee vacation, employees paid for accrued vacation time if they quit before taking their vacations. Will you pay employees for holiday if they don't come to work the day before, the day after the holiday? And should we pay some premium, such as time and a half, when an employee has to work on the holiday? So these are all considerations for that. How about sick leave? Sick leave provides pay for employees when they are out of work due to illness. Most policies grant full pay for specified number of sick days, perhaps 12 per year, usually accumulated after about a month, one day per month of service. The problem is that while many employees use their sick days only when sick, others use them whether they're sick or not. So in one survey, personal illnesses accounted for about 45% of unscheduled sick leave absences, family issues 27%, personal needs 13%, and entitlement 9%. Absenteeism costs US employers about 20% of their total payroll. So cost reduction tactics, employers are constantly looking for ways to reduce excessive sick leave absences. So there are pooled pay leave banks. So you can put your sick days into this pool and other people can use them up. My husband's office did that to help out a coworker. And there are other companies that will repurchase unused sick leave at the end of the year and actually pay employees kind of like a bonus if they don't use all of those days up. And they feel that it's worth it because it increases engagement and productivity. FMLA, so family, oh, now I can't say the whole thing. Family management leave. I can't come up with what the M is right now, guys. My brain is fried today. So give no employee a leave until the reason for the leave is clear. Confirm the legitimacy of any FMLA request and use a standard form to record both the employee's expected return date. So, for example, I've had students claim that they had to be gone for a grandfather's death. And then they've been gone for a grandfather's death over the course of 4 years. They've been gone 6 or 7 times for a grandfather's death. How many grandfathers do you actually have, right? So that becomes concerning. So many employers enrich their parental leave plans to make them more attractive for mothers. to return from maternity leave. Yeah, so what do you do to make it attractive to bring younger families in, or the families that have aging parents, for example? I mean, my husband and I talk about this all the time. His mother lives a block or two from his sister, and so his sister is the one who cares for his mother. I moved here to care for my mother. And so then what do you do when she needs more help and you have deadlines at work? How does all that play out in real life, right? And what will your employer feel is appropriate? Okay, so severance pay, that one-time separation payment when terminating an employee, it reduces the chances of litigation, and it helps comply with ERISA laws. So most managers expect employees to give them 1 or 2 weeks notice if they plan to quit. So it seems appropriate to provide severance pay when dismissing an employee. It reduces the chances of litigation from disgruntled former employees, and it helps reassure employees who stay after a downsizing that they'll receive some financial help if they're let go as well. So there are good reasons to actually give some severance pay and help people out. I interviewed a business owner who hires people, and then at the 90-day mark, when it's that end of the probation, they actually write a check for 1 month's pay, and they put it in front of the employee at that 90-day review. They put that check in front of the employee and they say, let's talk about how you've done here. Let's talk about how much you enjoy it here. And let's talk about whether you want to stay. If you have any doubt about what you expect from us and what we've delivered to you, here's a check for 1 month's salary, and you can take this and go. But if you think that there's any chance that you would be happy here and you would want to stay, then we'll tear this check up, and you'll go into your regular salary, your regular time. And they say that employee engagement, therefore, is very high. Employees are happy to return that check and say, no, I want to stay. And they're making a conscious decision to stay. And then they're talking about, okay, well, how are we going to make this a really good experience for you? And it's a totally different conversation. So employers are finding very interesting ways to engage with employees and make this an interesting opportunity. Supplemental unemployment benefits. So these are cash payments that supplement the employee's unemployment compensation to help the person maintain his or her standard of living while all out of work. So in some industries, such as automaking, shutdowns to reduce inventories or change machines are common. And so employees can buy the supplemental unemployment benefit and cash into it if they need to. Here are some main insurance benefits. Workers' compensation. So the income and medical benefits provided in work-related accidents to the victims of their dependents, regardless of fault. It could be monetary or medical or a combination. And there is help in determining what the benefits are and controlling the costs of what that will be as well. So I was on the job one day, and there was construction going on in my department, and I was not supposed to be there, but I was. This was before I came to Andrews. And I stepped out of my office onto glue where they were changing the floor. And I slipped and fell. And because it was witnessed, I had to fill out a workers' compensation form. I probably would not have filled it out otherwise. But I ended up having to go into the doctor because I took such a jolt to my body that I was in severe pain for several days and in moderate pain for quite a few days after that. So workers' compensation is a very interesting and very good thing to have. The university wasn't very happy that this happened because it goes on their record and it does increase their cost. And the reality was that I was disobeying orders when I was in my department. I was not supposed to be there. But it was good that I had that because it was a work-related accident. So hospitalization, health, and disability insurance. So health insurance looms large in many people's choice of an employer because it's such an expensive cost. I have seen insurance cost as little as $120 for a family and as much as $650 for a family of 4. In our family, we've paid as little as $120 for a policy for a family of 5. And then we have paid as much as $720 a month in another scenario, in another company. So it makes a very big difference in your take-home pay and in the variety of benefits a variety of things and amounts that it costs, that it covers as well. You can get mental health benefits, you can get psychology benefits, you can get a variety of different other coverages as well. You have the Patient Protection and Affordable Care Act of 2010 and other laws. So the Patient Protection and Affordable Care Act, employers will with at least 50 full-time equivalent employees must offer minimum level of affordable health care coverage or pay a penalty. So to be eligible, an employee must work at least 30 hours per week or a total of 130 hours in a calendar month. The bill was signed into law by President Obama in 2010, and employers face a number of other deadlines under the act as well. By 2018, employers with healthcare plans that cost more than the threshold of the law have to pay 40% tax on the amount of the coverage over $27,000. Individuals and group health plans that already provide dependent coverage must expand eligibility up to age 26. And my children are taking advantage of this right now. My oldest is 25 and will be 26 in June of next year. So she's in her final year of having healthcare coverage. And my son is 23, so he has 2.5 more years. So trends in employer healthcare cost control. Healthcare cost control is one of the big ways HR can improve profits, so measuring and auditing healthcare costs. Other cost control options are implementing HSAs and make sure employees know how the costs work. Then there's wellness programs critical, clinical prevention and incentives as well. Other insurance benefits could be long-term care, such as nursing assistance in older age patients, or life insurance, or benefits for part-time and contingent workers as well. Then we have retirement benefits. So there are three types of retirement benefits. You have retirement, survivor, or death benefits, and disability. And then outside of that, you have Medicare that provides health services to people age 65 and older. So the retirement benefits or pension plans provide employers or provide income to individuals in their retirement, and just over half of full-time workers participate in some type of pension plan at work. There are contributory and non-contributory plans. So in other words, plans that you as an employee must contribute to, and other plans where you do not have to. And then there's defined contributions versus defined portability. So a 401k and other pension plans, the 401k employee authorizes the employer to deduct a sum from his or her paycheck before taxes and to invest it into bundle of intersections. Then we have savings and thrift accounts, we have cash balances, balance plans, and then we have hybrids. In the pension planning and the law, Pension Benefits Guaranty Corporation ERISA established this PBGC to oversee and ensure a pension if a plan terminates without sufficient funds. So thousands of benefit plans, both private and public, are worrying about underfunding. And you have to make sure that your program is solvable. So membership requirements: when does the employee become eligible for a pension? And under the Tax Reform Act of 1986, an employer can require that an employee complete a period of no more than 2 years service to be to the company before becoming eligible to participate in the plan. So you can have a pretty long wait time. You have an early retirement window. So to trim their workforces or for any other reason, some employers encourage employees to retire early. So early retirement window programs make arrangements for specific employees, often age 50 and older, a window or a limited time that employees can retire early, generally with a combination of improved or liberalized pension benefits plus cash payment. Unless structured properly, older employees can challenge early retirement programs as the de facto way for forcing them to retire against their will. So finally, main employee services and benefits. These include personal services such as legal and personal counseling, family-friendly services such as daycare facilities, educational subsidies, executive prerequisites, and so on. There's voluntary benefits, And these can be quite the laundry list of things that can be available. Then you have employee assistance programs. These provide counseling and advocacy benefits for personal problems that may arise and may affect the person's ability to work or make decisions appropriately on the job. Then you have family-friendly work-life benefits like child care, sick child benefits, elder care. You have educational subsidies. You have other personal services. I've seen businesses have dog care on site, laundry and dry cleaning on site, and groceries and a whole slew of other things. So executives perquisites or perks. When you reach the pinnacle of an organizational pyramid or close to the top, you will find waiting for you executive perks. So perquisites, or perks for short, are specific benefits for top executives. And these could range from company planes to private bathrooms, and most fall between these extremes. So it could include management loans, stock options, financial counseling, relocation benefits, subsidized mortgages, purchase of the executive's current home, payment for the move, and so on and so forth. So it can be very, very interesting packages that come with that executive position, high-level executive position. So flexible benefit programs. This is a page from an online survey of employee benefits preferences, and they're asking about medical, dental, and vision plans. A lot of companies are offering more of a cafeteria approach, where you have a certain number of days to go in and kind of pick and choose kind of cafeteria style, and have flexible spending or core plus options. And then finally, flexible work schedules like flex time, where you have a flexibility in what time you start and stop. Telecommuting, where you have the opportunity, as long as you're getting work done, work from home. About 62% of employers offer at least some telecommuting options. These are in large corporations. You have compressed work weeks. So instead of 5-day, 40-hour work weeks, workers can compress it into 4 days. They have to work longer during the work week, but they can compress it and have a longer weekend typically. So job sharing allows 2 or more people to share a single full-time job. So two people may share a 40-hour per week job, with one working mornings, one working afternoons, and so on. You have work sharing. So this temporarily reduces your work hours, but it prevents layoffs, and it allows the company to actually grow again when the time is right. So those are your main concepts on benefits.